Today, nearly everyone around the world knows that China and the United States are engaged in a trade war. But how did this conflict begin, and why did it even start? Many people might not actually know. To understand it, we need to rewind to 2015. That year was an ordinary but extraordinary year for China. The Chinese stock market surged, with the Shanghai Composite Index reaching 5,178 points, a historic high. On the surface, China's economy looked vibrant and booming. But beneath that prosperity was a looming crisis. The U.S. government, along with international capital forces led by George Soros, had their eyes on China. Behind the scenes, they launched a full-scale economic offensive. It's no exaggeration to say that if China had lost that economic war, decades of progress would have vanished overnight, throwing millions into unemployment and pushing the entire society into stagnation or decline. Yet from the outside, 2015 appeared calm, peaceful, and uneventful. So what was really brewing under that surface calm? Let's go back to 2015. For the U.S., it was a year of apparent success. The dollar index had been rising steadily throughout 2014, and the U.S. economy seemed to be entering another golden era, like the post-World War II boom under Roosevelt's New Deal. In 2015, the dollar kept rising, up another 25% compared to 2014, with the exchange rate against the euro nearly hitting 1-to-1. Financial media praised America's economic recovery and predicted a bright future. But from today's point of view, America's leaders were likely panicked. The soaring dollar meant global capital rushed into the U.S., converting their funds into dollars and waiting for appreciation. Since the U.S. economy is built heavily on its stock market, the rising dollar made holding dollars more profitable than investing in stocks. Ordinary Americans began dumping stocks in favor of dollars. This was unacceptable for the U.S. government, because the more people hoard dollars, the less money circulates. And when money stops flowing, its value rises even further, creating a deadly cycle leading to deflation. Deflation sounds technical, but the consequences are very real. When money keeps gaining value, people stop spending and investing. The stock market dries up, consumption drops, and businesses can't sell their products. That leads to bankruptcies and massive unemployment. The U.S. already struggled with unemployment before 2015, and deflation would make it worse. People in debt would also suffer. If someone owed $10 when the exchange rate was low, deflation would suddenly make those $10 worth a lot more. Even if you paid back the same amount, you'd still lose real value. And in a country like the U.S., where consumer debt is sky high and borrowing is the norm, this is dangerous. People take out mortgages even without stable jobs, and to encourage home buying, the government had already slashed mortgage rates from 5% in the 1990s to just 1% in 2010. Inflation means monthly mortgage payments become far more expensive in real terms. As incomes drop and jobs disappear, people start defaulting, and housing prices crash. No one wants to take over expensive mortgages. With Americans using heavy financial leverage, deflation triggered collapse of communities and turned into a global financial disaster. The best, mighty crisis, and worse, would tear the country apart. The U.S. stock market is central to its economic system. COVID-19 hit and triggered market-serving breakers, helped bring in $20 billion just to the U.S. stock market plays a role similar to China's real estate market. It absorbs national risk. If it crashes, the entire country will be left with it. So by 2015, America was standing on the brink of it's cracked over countries. That's why the U.S. released stock amounts of $1 billion, which basically means the market. Even the same money appreciated, the U.S. and other economies to make the dollar less valuable. Certainly, this allowed companies to borrow and spend for the entire year. January 2015 alone, the U.S. borrowed $186.7 billion, followed by even larger billions of dollars. Investors rushed to convert their dollars into personal currency. In 2015, nearly every country was printing money. Why? Because if they didn't, they'd be crushed when the dollar retracted. As an international currency, the dollar brings prosperity where it flows and disaster where it leaves. So, if the U.S. inflates its currency, others are forced to do the same, risk mass exodus of capital and collapse of their own currencies and economies. And which country was the U.S. most eager to target? points. The Asian Infrastructure Investment Bank was launched, and the Belt and Road Initiative began to reshape trade. These moves struck at the core of America's interests. With both new and old grievances in play, the U.S. prepared a financial ambush. So, did it succeed? Was the U.S. able to plunder China's wealth? And how did China fight back against the financial empire?